Welcome to part 2 of my WidePoint Corporation analysis. Now, if you haven't seen my first video on WidePoint where I look at the business side of things, then I do suggest you check that out. The link will be in the description down below. But if you've already seen that video, then welcome back. Now, WidePoint Corporation. It has the ticker symbol of WYY. Now, right now, its market cap is sitting around 56.4 million, which when you actually have a look at their revenue is not actually that much. It has a 52-week range of $4.60 to $15.89. Now, another thing you'll probably see is that the average volume isn't really that high, with an average volume of 69,000 and today's volume of 32,600. Looking at the graph, today it's in the red, 5 days it's green, 1 month it's in the red, 6 months it's really in the red. 1 year it kind of seems to be leveling off a bit. It did have a high around January, and for 5 years it's actually green. Looking at it from a max point of view, when it first came on, it was like $92.5. It dropped all the way down to penny stock level. And yes, ever since then, it's kind of been a bumpy ride. Firstly, starting with their 10K form, which is their annual revenue for 2020. This will just kind of give you the big picture revenue. Rather than just looking at an individual quarter, you can actually see what they do for a year. Now, if you're ever looking at a company to invest in, it helps to look at their website and also look at one of these forms and look at their business overview. Because if you look at a website might emphasize one really small part of what the company actually does, but the business overview will give you a much clearer picture and straight to the point. And if you look at a website of a company and it sounds just awesome and fantastic, always double check it with the business overview. Because if it sounds too good to be true, it sometimes can be. You can have a company that on their website says they are pioneers in some particular industry. It could be quantum computing, it could be electric vehicles, but then when you actually have a look at their business overview, it's not really what they do. And then when you compare it to where they actually make their revenue, yeah, electric vehicles or quantum computing might make up like 3% of the revenue. So yes, always double check what the actual company does on their website. Here we have their yearly revenue for 2019 and 2020. And it is quite a big difference. If you look at from their carrier services, it went from in 2019, 68 million. All the way up to 137 million. Now, actually looking at the totals, in 2019, they had 101 million, and in 2020, they made 180 million. Now, the reason they had this, such a big increase was actually to do with the fact that the carrier services increased primarily due to activities of the US Department of Commerce contract supporting the 2020 census. This actually made up 61% of their total carrier services. Now, the problem with this is the fact that this doesn't get done every single year. I don't know about the census, but in terms of their contract with it, yeah, the largest phase of our work on the 2020 census project was completed in late 2020. So now they only have minor kind of work up until October 2022. In terms of cost of revenue for 2020, their cost of revenue is actually quite high, leaving them with a gross profit of about 20.4 million. After all other expenses and stuff, they're left with 3.2 million. And when you actually have a look at their net income, they ended up with 10.3 million, but that mostly came to do with tax benefits. Now we have their 10Q form, which is the first quarter for 2021. Both of these forms will be linked in the description down below if you want to see them yourself. Looking at the revenue, they ended up finishing the quarter with 20.6 million. Now, when you compare that to the year before, it is literally half. Give or take like a few 100,000. Now, what I will say, and this is quite nice on their part, they did manage to reduce the percentage of their cost of revenue relative to their revenue. Because for 2020, they had 39 million in revenue, and for cost of revenue was 34 million. Their gross profit from that was 4.9. Whereas for 2021, they had 20 million in revenue, 15.9 million in cost, and 4.7 million in gross profit. So even though they had that big drop in the revenue, their gross profit, there isn't actually that big a difference. Same with their income from operations. In fact, when you actually have a look at their net income, they were higher for this quarter than they were for the first quarter of 2020. In terms of assets for cash, in December 31st, they had 16 million in cash. And for March 31st this year, they had 17 million. They did have about a 20 million reduction in terms of total assets, but they did actually manage to have that same reduction in liabilities. Looking at the earnings per share, it worked out to be for this quarter 0.6 cents. A couple of points I want to point out is that the reduction in terms of revenue came from the fact that our carrier services decreased as compared to last year, primarily as a result of the expected winding down of the US Department of Commerce contract supporting the 2020 census. We continue to expect managed services revenue to be lower in 2021 than 2020 as a result of the winding down of the 2020 census project. Now, losing money in any sense of the word is not really that nice, but in their defense, they actually have managed to increase their gross profit margin. Gross profit for the 3-month period ended March 31st, 2021 was approximately 4.7 million or 23% of revenue, as compared to approximately 4.9 million or 13% of revenues in 2020. The increase in gross profits percentage was driven by the increase in higher margin managed services revenue. That is a mouthful. Now, they do specify our gross profit percentage varies from quarter to quarter due to revenue mix between carrier services and the managed services. But yes, that is WidePoint. And in terms of the business idea, cybersecurity is something that is becoming more and more important, especially with the fact that a lot more people are working remotely. So companies really need to protect what is theirs, and it's the same for governments. In terms of the business side of things, their first quarter is looking good. I mean, they did have a reduction compared to last year, but their gross profit margin is much better, an increase of 10%. So my final thoughts on WidePoint as a company, I do really like it. And when you actually look at their revenue relative to their, market cap, they have revenue of 180 million for last year and a market cap of 56 million. Although they don't have a massive gross profit, it still doesn't seem that overpriced. And it is in a very important industry. And it also has kind of a brand behind it. And the fact that it does work for the US government, which is very high on terms of security, yeah, it could actually be quite a good selling point for it for commercial use. So in terms of an investment, yeah, definitely something I would consider. But I will always say that do not just take my word on it. This video is not meant to come across as investing advice. Please do extensive research before you buy any company and never invest more than you're willing to lose. Saying that, if you have found this video informative, I would really appreciate if you hit that like button. And if you are interested in any other companies and you would like me to have a look into, then please let me know in the comment section down below. Thank you very much. I do hope you have enjoyed, and I will see you next time.